Well, Canadian e-commerce darling Shopify is in the headlines this morning. The company just unveiled some fresh AI tools for merchants on its platform. And it also is teaming up with Target, one of the biggest retailers in the United States, partnering on expanding Target's marketplace for third-party merchants, with Target seeking to play catch-up in the online world with the likes of Walmart and certainly Amazon. We're back again with Kristina Hooper, Chief Global Market Strategist with Invesco, to talk a little bit more about consumer trends. Kristina, you know, it's interesting. We talk so much about the tech sector, but tech, and this partnership is a great example of it, has to be built into just about every business today. What are the trends you're seeing with how people are shopping these days?
Well, it's interesting. I think that having that multi-channel approach is so important. Many consumers during the pandemic learned to do virtually all their shopping online. But for a significant component of consumers, what they've found is that they missed out on that experience during the lockdowns. And so as a result, they're much more likely to embrace in-store shopping. I think what makes sense is for companies to have those multiple channels as ways for consumers to shop. It doesn't always work for all brands, for all businesses, but it has proven effective for a number of brands.
And regardless of whether you're meeting people online or meeting them in the store, I think the overall health of the consumer is something we're spending a lot of time trying to assess at this point. As you know, here in Canada, in the higher interest rate environment, we have seen some signs of consumers feeling stretched. By comparison, I think up until this point, a lot of people talked about the U.S. consumer being resilient. What are you seeing in the data right now?
Well, we started to see a couple of months ago that there's something of a two-speed economy. So we have, higher income households that don't feel much pressure at all, that are doing very significant spending. And that's where a lot of the resilience has come from. Lower income households have come under pressure. It's higher prices, and it has had a significant impact. Luckily, though, unemployment is still very low. It's only crept up to about 4%. And so that means that most consumers do have jobs. They can still spend, but for lower income consumers, they are making choices in terms of what they're buying. We're certainly seeing some substitution going on as they try to make ends meet in a higher inflation environment. The good news, I think, though, is that we're likely to see that pressure come off soon, right? In Canada, we've already seen the start of rate cuts. We could very well get another one soon. In the U.S., I think certainly rate cuts are in the offing. Now, this is going to be a gradual easing, but it will still take some pressure off consumers.
Now, you outlined earlier that you're anticipating 2 rate cuts in the United States this year, likely beginning in the third quarter. How much of this consumer trend will ultimately factor into what the Fed does, in your opinion?
I don't think it's going to have a huge impact. Certainly the Fed wants to see a cooling of the economy, and I think it's getting it in recent data, at least some of the recent data. But of course, what's most important to the Fed is what it sees in terms of inflation data. Its preferred gauge, of course, is core PCE. We're getting that this Friday, and I think we'll see core go down a bit, and that should help build the Fed's confidence that it can cut by the end of the third quarter. I also think the Fed is going to care about inflation expectations, especially consumer inflation expectations. Unfortunately, they've bumped up a little bit, but I still think they can be characterized as well anchored, which is what the Fed wants to see.
I mentioned we're going to have a showdown between Joe Biden and Donald Trump this week. And at a certain point here, I would imagine some of the market conversation will shift to the political realities of 2024. How does everything we're watching in the markets tie into the November election, or does it not? I mean, I think the unique thing here is everyone's trying to anticipate what happens with interest rates in the U.S. and whether the election itself complicates that. How are you thinking about things?
So I don't think that the election will complicate this. I think the Fed has been very clear that it is not going to let the election impact its timeline, that it will be very comfortable cutting even close to the election if it's the right thing to do. And so I think also that the election isn't going to impact markets. I just think what we've learned from history is that elections and politics really don't matter. Certainly, they can create short-term periods of volatility when political uncertainty goes up, but it doesn't really have an impact over the longer term. So it's so important for investors to put on blinders and focus on that which really does impact markets over the longer term.